So we have a big day in the markets tomorrow. Tomorrow determines what the Fed is going to do for the rest of the year. We have the CPI data coming out in the morning, and that's going to determine what the market is going to do. Is it going to go up? Is it going to go down? We'll find out. I'll give you my thoughts after we talk about my trades for the day. So overall, we can see we had a good day in the markets. The E-mini S&P 500, I'm up $183. The E-mini S&P 500, the market SPX, went crazy today. So it dropped at the beginning of the day, pretty low down. That was what I was expecting because we were having the CPI data coming out. People were going to be selling off just to be safe. But toward the end of the day, we saw something different. And I'll show you in the charts. My copper position, overall flat on the day. It was up and down here and there. It's good to see, even though it was up nearly 2 cents, that we're still flat on the day. And then Tesla made a big jump and then it pulled back a little bit. We'll look at the charts here as well. So this is really great to see coming from Tesla. We see 2 green bars these past 2 days. We're starting to see it break out away from this short-term falling trend here. It broke this level, it broke the 21 EMA, and it held. This is really good news. Yesterday, it broke the 8 EMA, and it held. So I think we could potentially see the stock go up to the 50 moving average and then potentially up to the 200s. Now, all of this depends on what happens tomorrow. If the market is going to go down tomorrow, then forget everything that I just said, because all of this is purely technical. And if something like the CPI report comes out bad, then potentially everything is going to be bad. So anyways, looking at the stock patterns here, looking at what I'm seeing here, it's a really good sign. We have a double bottoming here effect going on here, this pattern, and then we have a push coming back up. And there is no indication that this thing is going to reverse here. I think we'll see some resistance here around the 50 moving average. We have some supply line here. And then after we break through that level here, I think we have pretty well free game up into the 190s. There's not a whole lot of resistance in this area, which is a good sign for me because I opened this position. I have a 180 put and a 175 put that I opened around the 200 range before it started falling. So if it reaches back at that price again, I'll be in pretty good shape. I may be able to close this position before earnings. And I bring that up because Tesla currently has roughly 30% of my account right now. So it'd be great to have that money freed up. So next is the E-mini S&P 500. You can see right here on this candle today, it dropped all the way down below the 21 EMA, and then it pushed right back up to the 8 EMA. That's a really good sign to see. Let's take a look at the 5-minute chart, and you can see just some of the action that we had today. So we can see here on the 5-minute chart, the E-mini S&P 500 at the open drops down, down, down. In my account, I was down around $1,000, and then it started coming back up. It went back down, and then it pressed back up in the afternoon. This is really good to see. My kind of speculation, my thought is that the market was pulling back here because it didn't know about the CPI data, and then somehow it got some confidence toward the end of the day. I mean, people put some money into this before a really big day in the market, and it actually went right back up to where it was, and it actually turned into a green candle on the day. That's pretty serious on a day like tomorrow. And we're talking about the day before we have information that's going to help the Fed decide what they're going to do with rate cuts for the rest of the year. And people voted with their dollars that they're going to hold on through tomorrow. So that's a really good sign to see. You would think that you would see a red candle coming down like this. Instead, the price is holding here. This was the jobs report at the end of the week last week, and it pushed back up here. Now this is the CPI report that's coming out. It's coming down and back up. So really good to see here. I think we'll have a good report tomorrow. That's just my 2 cents in it. I think that we could see the stock market continue on its trajectory up the trend. This is only going to be a little blip in the trend. And I think we'll be looking back in a few months, and this will just be a tiny little blip that nobody cares about anymore. That's my thoughts on it. I could be totally wrong. My biggest concern here right now is that I've got roughly $7,500 of capital requirement here in the E-mini S&P 500 right now, and that's roughly half of my account is in the E-mini S&P 500. So that does make me kind of nervous. I feel like I'm in pretty heavy in my 30-20-10 strategy, And what I may need to do here is just do maybe once every other day. So instead of putting a trade on every day at 30 days, do it every other day, and then the capital requirement is much less. I don't make as much money, but I also don't have half of my account stuck into the same position. So you can see right now I nearly have 22 positions open. I only have a couple more trades to do, and then I filled up the entire chain. I need to consider doing every other day just to reduce the amount of exposure I have in this single stock. The other option I have is, instead of doing a 20 delta here at around 50.70, maybe I do a 14 delta at 500. Maybe I do a 15 delta. So maybe it's a 30-15-10, or maybe it's a 30-10-10. Something like that that's far enough out of the money where it's not going to be a concern. Do I make less money? Yes. But the likelihood that I'm going to be in the money at 0 days to expiration is extremely low. So right here in this position around the 14 delta, I would be collecting around $45. If I did a 10 delta, you can see it'd be around $33. So I'm thinking that I'll be more comfortable moving it down to 10 delta, 13 delta is a much safer move, and maybe doing it every other day instead of every day, just to reduce my exposure, reduce my risk. And that's the name of the game, right? I want to reduce my exposure and to not have all of my money, half my money, into one position. I need to be able to spread out, trade small, trade often, reducing my exposure to one stock, reducing my risk by reducing the amount of delta that I have. So that's going to be my strategy. So I'm considering that strategy. I'm not exactly sure. I'd like to know your thoughts. Tell me what you think about the 30-20-10 strategy. Do I need to reduce my exposure? Do I need to reduce my risk to be able to survive? And the biggest risk here is when the market decides to turn around and start going down. That is the big question for me, is how much money could I lose when the market goes down? So overall, copper went up and down, but it's settling in the middle here. We have a doji sign. This could be a top, which is a good sign for me. I need the price to go down for an optimal level. Let's take a look at the curve tab so you can get an idea of my situation. Current price is here around 432, and I need it to be around 420 to 425 to be in that prime range. It just basically means that that's the fastest way for me to get out of the position with my profit, is for it to be in the middle of this curve. So it's fine where it's at. I'm actually pretty well in the middle between the put and the call. So positionally, I'm fine, but it is going to take some time for me to get out of this position if the price stays where it's at right now. You can see before I get about halfway through at the current price level, it's going to be another 10 days or so before I get out of the position. That's fine if I have to hold it for 10 days, but it'll be a little bit sooner if I can have that price drop a little bit further. So either way, so far, copper's doing well. My IV rank is up to 97, and it was before around 93, 94. So we do see a spike up in that IVR, but I think we can start seeing some consolidation here, or a pullback. We do look extended right here on the daily chart. We have a gap here between the ADMA and the current price. So I do expect it to level off or to start dropping, because this could be the sign of a high. We have some resistance up here, a high at 435. So I do expect this to settle down and the IV rank to start going down from here. So that's a good sign for me. That's exactly what I want. I want that implied volatility to contract. I want the price to stabilize, and then just let time roll on until I can get out of the position. So tomorrow is a big day in the market. We'll find out in the morning, 8:30 Eastern time, what the CPI data is going to tell us. The current estimate is around 0.3% increase. I think many of the analysts are deciding around 0.2%, 0.25%. Either way, what we can see from the charts right now on a technical aspect, it looks pretty good. I think we have some buying pressure before this big day. That's a very comforting thing. Now, we'll find out for sure tomorrow. And I'm a new options trader. My goal is to get a 50% return by the end of this year. If you want to follow me on that journey, hit that subscribe button. Maybe you'll learn something from me. I'm the new guy, so maybe, maybe not. But if this video was a help to you, hit the like button, and we will see you on the next video.